think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. Today, I'm just going to do a quick video on bear markets, and this is what I've been trying to understand because this is my first bear market that I'm actively investing in. The first bear market that I went through was the crypto bear market in 2017, but I actually just exited that bear market and didn't touch it again. Some of my money was lost in that, whatnot. And then I did gain some money, but, I stayed out of it ever since then. And then I also kind of experienced the 2018 bear market. That was when the Fed was tightening, quantitative tightening and raising interest rates. And we saw the market take a big dive. And I wasn't as involved as much. Like I had a little bit of money in, but not a whole lot. So like I wasn't really, impacted as much by it like some people. And so this is the first bear market that I'm actually engaging in, that I'm actually, investing in, that I'm actually monitoring, because I have a lot more money invested right now. And so I'm trying to learn as much as I can from people that have come before me, people that have a lot more experience than me on what to expect in the bear market so that I can be prepared accordingly. And obviously, you have to learn somewhat through experience. You have to learn a lot through experience, but it's good to just hear from other people, like what they're doing and then how they're positioning themselves and what to expect, in the bear market. So today we're going to watch this clip from Kitco News. They interviewed Ted Oakley, which Ted Oakley, I actually like a lot of his interviews. I also read a few of his books, The Psychology of Investing or Money or something like that. That was a really good one. He also has another one of like how to position your children for success and stuff. So Ted Oakley does these small books. They're short reads and they're very helpful, especially for us, common people, and just how we can position ourselves for success. So let's go ahead and jump into this interview as he talks about bear markets and recessions.
Recessions are difficult to invest in when it comes to economic periods. Like you said, the stock market could see a further correction. High yield debt is not a great place to be. Where do investors go then, Ted, to find yield right now? Are there certain sectors that might perform better, certain asset classes that might perform better during a recession, I mean?
Well, I think what happens, David, if you're in a stock market, even things that have higher yield in terms of common stocks or preferreds, they typically are going to get affected too in a really bad bear market. You have to be able to adjust some things, and for us, the adjustment we make is we carry a lot of liquidity. By that I mean we're 50% or higher, so that we're going to try to get things. I'll give you some examples.
Yes.
We own probably 7 or 8 preferreds that all yield between 5 and 3/4, 6%. We own 4 pipelines that yield 7.5 to 9%. We own things of that nature. We will own short paper too and mix it with those things for the time being. One of the things about a bear market is you are not going to be able to really, most investors will not be able to really not have any loss at all. But what you try to do is really manage it. I mean, if we're down, I remember back in the 2000 period, we were down about 10% overall for the 3-year period. Markets were down almost 50 or maybe 50.
Yeah.
Well, you can come back really quickly from 10. But when you're down 50, it's going to take you a long time because you got to make 100%. So what you try to do in these markets is you try to manage the risk and don't get too caught up on, hey, I'm down 2 or 3 or 4%. Yes, you are. But you know what? You're not down 25. And I think that's where people have to keep their head on here, because that's the difference in trying to keep a realistic approach to what a bear market really is.
Yeah, that was very powerful for me. Obviously he talks about having liquidity, which is very important. And then they're also into like pipelines, like energy pipelines, that pay, 7 to 9%, which I'm actually in quite a few of those. Not quite a few of those, but I'm into about 3-4 different companies because of my view on energy and the lack of investment in it. And then he talks about it's just about how much you don't lose. Like you have to focus on managing the loss versus making money. I mean, yeah, you can make money by shorting the market and such, but you can also lose money because right now we're in we're in a decent bear market rally, and I actually lost money on the S&P, shorting the S&P because I was expecting when the Fed raised by 75 basis points that the market was going to tumble. And that was the opposite. It actually got short squeezed and I lost money, in that. And so those are some of the things that you have to think about. So like even shorting the market can be very complicated. So you want to be able to manage how much you lose. So if you invested in a huge tech companies, in November of last year at the highs, I mean, you're down quite substantially. However, if if you didn't go that route and you invested more conservatively or whatnot, I mean, you probably lost some money, but you're most likely not down as much as many other people. And so that's an important note to take. That's an important thing to take note of.
Okay. How do you feel about hedging? For example, I'll just give you one example, buying a long dated put option on one of your positions. Would you consider doing that?
Well, I will tell you what we do.
Okay.
That's a little different than most people. But rather than take major capital gains, because we have some things that are really big profits over the last 10 years, and rather than take, and we're over 51% or so in the equity account. But part of that 51%, I will tell you how we get there, is we have about a 7.5%, about a close to 8% position in the short S&P. And rather than take those capital gains that are so large, okay, and we're going to pay a major piece of tax on it, what we try to, and we want to own those companies still. So what happens is we will hedge out and use that, we use it as a cash position. It's up in price for us right now because we put it on, early in the year. But that's what we do. We're not big in the put market or the call market either, for that matter, but that's how we do it.
How do you feel about consumer staples? Traditionally, they've done well during recessions. Take 2008, for example. During 2008, 2009, Walmart was up 20%. How do you feel about these big box stores now?
Well, I think what's happening with them is, and I think people forget about this, but most of the people that go to, they do the consuming are people that are really starting to hurt in terms of cash flow. And I think that has more to go. I mean, you've seen Target and Walmart and the numbers come out. They've been, disappointing. We don't own those stocks, but there's a time to own them. We don't think it is right here. I mean, there's only the things that get you through bear markets. You have to be careful of cyclicals. You have to be careful of those sorts of things. You can see things like a little bit of healthcare. You can see things where maybe a Visa, MasterCard, that kind of thing, where you've got to make transactions, that sort of thing. But the consumers will pull back and probably pull back even more. So we don't do too much in that area right now, other than what I just mentioned.
Another way to hedge, I guess, people have talked about owning hard assets during recession, so precious metals and or real estate. How do you feel about either of these assets?
Well, we own the real estate investment trust, but we only own medical REITs right now. We really feel like that if you look at commercial REITs and you look at industrial REITs, they're starting to weaken. And so we own a couple of medical REITs, and then we own a REIT that has convenience stores. We feel like we're okay with that. I mean, that's something that keeps on moving. But that's where we concentrate. I don't think real estate in itself is going to be the greatest place, but we do own those for sure at that point, and that's something we have in portfolio. I will say this about the metals: we have 3 strategies, in the really conservative strategy and the higher income strategy. We own about 4 to 5% gold. And we own that. We will not sell that. new accounts get that as well. And I think gold is sort of sort of a sleepy time right now. But people own gold when they get scared, when they get worried. And I think the worry and the scare is ahead. Gold sometimes, is weaker in the summer anyway. But we think you have to have a little gold in those types of portfolios.
Okay, so you're using gold as a hedge against heightened risk, is more or less your plan?
Well, and the dollar. I mean, what typically happens, David, is that when the dollar declines, and the dollar's just been on, just a big run, and that's one of the problems with gold. But when the dollar does decline, then you'll see gold, it'll go the other way. And it tends to go with the bonds too. You get bond rates coming down eventually, and you'll see gold as well. But right now, I think the thing about it is that it's sort of, I'll call it a fear asset. I don't think you can look at gold we don't look at it as inflation, deflation. We just think there's two or three things that affect it. One is a dollar, and one is when people really get worried, they look at gold.
Yeah, so you heard it from the man himself, Ted Oakley. He has some great points in there, especially about, gold or whatnot. I have a lot of money in gold. And I mean, just looking at that, it's like, okay, well, it's harder to sell, but at the same time, I'm not losing as much money as many people that have been in equities. And I'm also not spending all of my cash on assets that are, or not assets, but items that are going up in price. And so, I have a hard time owning cash. And so it's good for me to own gold because it just keeps me disciplined and it keeps me focused as well. Bitcoin is more liquid, so sometimes it could be easy to sell some Bitcoin when it goes up and to pay some bills and pay some debts and buy some things you probably don't need, things like that. But gold actually keeps me grounded, and so that was good to hear that perspective on there, especially with fear. So these are some of the things that we need to have. We need to have liquidity, for sure. Dividend paying stocks, especially like pipelines and things related to energy. And owning gold, is something that I do. These are all strategies I do, and I do think that all of these strategies have helped me not lose a whole lot of money. I was saying this bear market, and so that's something that I'm excited about. Just surviving through my first bear market. By the way, leave in the comments down below, how are you doing during this bear market? What are you doing to protect yourself, and how are you managing your risk or whatnot? One thing he talked about was hedging, and he dropped some knowledge on the taxes. Like, they don't want to take huge capital gains taxes if they sell some stocks. So they're hedging by buying a short S&P, which I don't know if it's an inverse ETF or what that they're buying, but they're not playing like put options or call options. And so that's an interesting take as well. I don't feel like I've been investing in the market long enough to where I'm like, okay, I got these super cheap. I do not want to sell because of X, Y, and Z. So that's kind of my take on that. I mean, there are some stocks that I own that I do feel like I got really very cheap, and they may go lower, and so I'm going to buy more. And those stocks I may not sell, but eventually when energy stocks go higher, I know that those are cyclical, so I'll eventually sell at some point. So drop down in the comments down below. What are you doing? What are your thoughts on this bear market? And how are you protecting yourself? I appreciate you all for joining me today. Peace.